Hi, this is Zak Mir with the US Chartbreakers here at Zak's Traders Cafe for Saturday, the 18th of May. Starting off with the S&P, where it's a glory run. We've broken the old April resistance, 52.65. Above that, looking for that blue line there from back in September. 54.20, perhaps as soon as the end of this month. Bigger picture target up to 55.70 by the end of next month if everything goes well. If it doesn't go well, then below 52.60. We risk a recent support around 52.20, but not expecting worse than that. On to the Nasdaq, and here a reflection of the glory at the S&P. I suppose not quite as exciting, maybe in terms of the push to new highs, but we have consolidated near the 18,500 level, and above that looking for 19,300 by the end of next month, which is the top of that September rising trend channel. If there is a rug pull, then the area of the 50-day line now at 18,000 would be the favored area. That's also the area of the broken resistance line there from back in March. Moving along to the stocks, and Applied Digital kicks us off with a rising trend channel base, breaking through the old, breaking through the 50-day moving average, $3.50, and the old support there from November at the same level. Above that, looking for up to $5.80 by the end of next month, which would take the shares back to where they were back in January. An interesting setup here from Broadwind with the gap through resistance, the old resistance there around $3. Above that, looking for $4.05 by the end of this month, which is obviously entering the main $4 to $4.50 resistance that we had back at the end of the summer. But the key here, staying above that $3 area. Onto a stock which is really flying at the moment, Cheetah Net Supply Chain Service, and obviously a great week, and also pushing through the old resistance there around $6.90. Above that, the top of that rising trend channel, the black channel there, as high as $13 by the end of this month. If you're a fan of the shares and looking for greater glory, could be up to $17.50 by the end of next month. But the key here is holding above that old resistance area, basically $7 plus in the interim. A stock which is quite topical at the moment is Critical Metal, and here we've got a situation that shows that the shares just breaking out of the recent consolidation, that resistance line there from back in April, and the 50-day moving average there at $10.30 above the 50-day line, looking for the top of that rising trend channel from March, as high as $14.70 by the end of next month on Critical Metals. Interestingly named stock next, and you can see that Doximity has just bounced against the resistance line there from back in July. That was around the $29 area, so looking for an end-of-day close above $29 to give us a move up to the top of the broadening triangle there from back in November, as high as $33.40. In the meantime, we don't want to see any pullback lower than the resistance on the way down, the April resistance, 26.70. So interesting setup there on that. On to a stock which I haven't covered before, but hopefully it'll make quite a few appearances here. Despegar, and here you can see a gapping through resistance with quite some momentum there. Top of that rising trend channel from October, heading for $18, and we're looking for that while we remain above recent resistance at $13.50. So relatively simple setup. The other point to note is the bounce, or the recent bounces of the RSI on neutral 50 once in April, and then also ahead of the gap up that we've just seen. We're moving along to GameStop, and here it's been a bit of a roller coaster. What's interesting is that we were looking for the shares to get up to the main resistance area there, $60 to $65, but it was a blink and you missed it affair. Obviously, we didn't get up to the best case scenario target at $76, that resistance line there from this time last year. But looking closer at where we are now, you can see that after the pullback, we've got an island top there on the chart the last 4 sessions, which is not normally a good sign, but we've been saved by the way that the shares have bounced off the floor of the gap from the 10th of May at around the $20 level, and above that on an end-of-day close basis, at least there's a chance of the shares filling the gap up to $27.59 over the next few sessions, even if the shares then fall away after that. But the key is that there's no end of day close back below $20.20, the floor of that gap from the other week. Moving on to one of our more solid stocks that we follow here, which is Tech, and here you can see that just consolidating at a previous target level, so let's call that the support area around $6, and while we're above that, looking for a partial or even full retest of the best levels through 12. Best case scenario would be up to $13.60 by the end of next month, but maybe it needs a little bit more time for the shares to settle down. Moving on to a stock which is or has been one of our favorites. The reason it's been a favorite is because it's hit our target. It did that on Thursday, top of that broadening triangle there from back in December. 27.80, above 27.80, looking for as high as $51, which is the upper parallel of that broadening triangle there from December. $50 plus, hopefully on tap for the end of next month. Ideally, we stay above the previous target and that spike back in April around the $28.90 level. Nice setup at Skill Soft, and here you can see why, that we're just waiting for this to break that resistance line there from back in November, call it $9.90 to be safe. We've already had support at the 50-day line, $8.30, so end of day close above $9.90, and we're looking up to $16.50 by the end of next month. The stop loss, the 50-day line, just near that $8.50 level. Pretty strong price action from SolarWind at the moment, and here we had that after the pullback from the spike, we had that initial target there, the rising trend channel base from the beginning of last year, $16.60, and above that looking for up to $45 by the end of next month, on the basis that we could hit the upper parallel of that rising trend channel from back in 2018, unbelievably. And looking for that by the end of next month. As I said, ideally we stay on the right side of $20 in the meantime. On to the last three. The first one to take notice of as a potential turnaround. We're bouncing off that 50-day line, $3.70. Above that, looking for the top of the triangle there from back in January at $9 by the end of next month, and that's obviously the main 2024 resistance area, but the key is holding that 50-day line just near $4. On to Tesla, but the message seems to be you go short of the stock at your peril. Obviously very volatile, but a bear trap island reversal, turning the shares around for May, and then the current position is finding support at and above the 50-day line at $170. Above that, looking for a retest of the $190 area, which is the top of that March broadening triangle, but certainly a volatile situation. Moving on to Tupperware, which may take over from GameStop, etc., as being the meme stock of the moment. Here we've got a V-shaped bull flag, as I call it. Clearance of $2.50 could take the shares up to $3.70 as soon as the end of this month, backed by the bear trap from below the February-March support area around $1.25, and also the sharply rising 50-day moving average. That's it for me today. More updates during the week.